Many people say, well, Bitcoin's not backed by anything. What's it backed for? It has no intrinsic value. And this, they grossly misunderstand the network. Bitcoin is secured by 4 types of power: computing power, electrical power, economic power, and political power. The computing power is 460 exahash. That's all of these millions of Bitcoin miners, custom silicon, and they are channeling 16.5 gigawatts of electrical power into 460 exahash. If you wanted to redirect all the computers at Google and Amazon and Microsoft and all of the iPhones to do hashing of Bitcoin, they're probably not going to generate 460 exahash.
Michael Saylor, the founder and executive chairman of software and business intelligence firm MicroStrategy, has extended his reputation as one of the biggest Bitcoin bulls in the world today. On November 30, Saylor announced another multi-million-dollar Bitcoin purchase for MicroStrategy. According to Saylor's Twitter post, MicroStrategy has acquired an additional 16,130 Bitcoin for approximately $593.3 million at an average price of $36,785 per Bitcoin. As of November 29, 2023, MicroStrategy's Bitcoin holdings had climbed to 174,530 Bitcoin, acquired for approximately $5.28 billion at an average price of $30,252 per Bitcoin. The latest Bitcoin purchase firmly seals MicroStrategy's position as the publicly traded company with the most Bitcoin holdings. The Virginia-based company's first Bitcoin purchase was about $250 million, and now only 3 years later it has spent over $5 billion on the leading crypto asset. These purchases, as well as Saylor's personal holdings of about 17,000 Bitcoin, all point to the billionaire executive's strong, unwavering conviction in Bitcoin. As many Twitter users pointed out after Saylor's latest announcement, this is a successful billionaire business executive who finished in the top 1% of his class at MIT, and he is consistently giving us his whole game plan for staying wealthy free of charge. Saylor recently virtually addressed the attendees of a Bitcoin conference in Argentina. During the insightful presentation, the billionaire executive made a case for investing in Bitcoin amidst all the economic uncertainties and constant currency debasement by central banks worldwide. In Argentina, for example, analysts pooled by Argentina's central bank raised their estimate for annual inflation for this year to 185% in November, up from 180.7% in October. Before that, in September, the year-over-year inflation in Argentina was less than 140%, meaning it is climbing rapidly with each passing day. While the situation is much better in the United States, which has the world's reserve currency, Saylor explains that the difference is not as stark as you might believe. Just like the Argentina peso, the Venezuelan bolivar, and other currencies, the dollar is rapidly losing its value due to inflation and monetary debasement. This means only a handful of assets can help you maintain your wealth, and even fewer can help you grow it over time. We will now bring you clips from Saylor's presentation as he explains just why Bitcoin is the only asset that can help you maintain and significantly grow your wealth over time. Please watch, share, and like this video. Also, ensure you subscribe to the channel, turn on post notifications, and don't forget to drop your comments and observations in the comments section below. Thanks, and enjoy the video.
So we could start with an observation in this entire last 100 years. The world reserve currency, the US dollar, is collapsing versus assets such as the S&P index. The S&P is 500 of the most valuable companies in the United States, or maybe the world. It's collapsing against real estate, against gold, against art. And it's hard to see this over the course of a year or 2 or 3 years. But if you look over the course of a century, I find it to be very clarifying. And on average, what you find is the United States dollar is losing 7% of its value each year for the last 100 years. Now, if you look at government statistics in the United States, they will tell you that the inflation rate's about 2%, and they'll show you a graph like this, which shows that the dollar has lost, something like 94% or 95% of its purchasing power over this 100 years. But that's based upon the consumer inflation rate. Consumer inflation is the lowest inflation rate. It's a market basket of goods that are easy to manufacture with a machine, or they're easy to print, or they're not labor intensive, they're information intensive, like watching YouTube videos. or boxed starch or things manufactured. This is the lowest inflation rate. In fact, the producer price index is a higher inflation rate, and the asset inflation rate is higher. So it's a mistake to think that $26 in 1910 or 1920 is worth $1 in 2020. In fact, if you look at the US dollar versus other assets, you can see it's losing value at a much more rapid rate. So the consumer goods rate is 93%, minus 93%. That's this chart. The US dollar versus gold has lost 99% of its value. We went from $20 an ounce to $2,000 an ounce, and so 99%. And the US dollar against the S&P index, which is the US dollar against a corporation, of a successful competitive company, or the US dollar against Miami Beach real estate, has lost 99.8% of its value over those 100 years. Now, that's not really well understood. Most people don't think the inflation rate is 7%. They think it's 2%. And the difference between 2 and 7 is 93 versus 99.8 or 99.9. Now, let's focus in on why the dollar loses value against real estate so rapidly. I'll show you a picture of Miami Beach. You see, what you notice is there's a fixed amount of beach, and all those buildings on the beach are there because the value of an acre of land on that beach is $20, $30, $40 million. Very expensive. In fact, the value of an acre in Miami Beach about 90 years ago or 100 years ago was $10,000 an acre. And a few years ago, it was $10 million an acre. Today, it's $20 million, $1,000 to $2,000. Now, why is it that the price goes up so fast? It goes up much faster than the cost of a Big Mac or the cost of cereal or the cost of a YouTube video. And the reason why is because only God can make more beachfront. Politicians can't print more beach. You can't manufacture more beach with a factory. And AI can't create more beach on a silicon chip. There is no way to trick the world into there being more beachfront property. You can see it's a certain amount. It was that amount in 1930. It's that amount 100 years later. And so as the money supply expands, that price goes up proportionally. So that's a fair yardstick. And what you would say is the beachfront property is scarce, desirable property.
The United States dollar, the world's reserve currency, has lost 99.8% of its value against assets like prime real estate property in just 100 years. It's worse everywhere else. While the US dollar is losing about 7% yearly, other strong international currencies are losing around 14% annually. Weaker currencies like the peso and the bolivar are collapsing even more rapidly. In the last 20 years, the Indian rupee is down 47% against the dollar, the Pakistani rupee is down 81%, the Turkish lira is down 90.6%, and the peso is down 99.8% against the dollar. The dollar itself is collapsing rapidly against the S&P and prime real estate properties, which means that measured against these assets, these other currencies are practically worthless. During his presentation, Saylor points out that only a few asset classes outperform the dollar's true inflation rate, which is definitely higher than the official 2% narrative. As you can see from the chart, commodities vastly underperform even the fake CPI rate. Cash also falls short, while assets like homes, bonds, the S&P, and the popular 60-40 portfolios perform above the CPI rate, but below the actual inflation rate. This brings us to Bitcoin, one of the few assets that beat inflation and every other thing that makes investing challenging. Here are more clips from Saylor's presentation.
If you want to preserve your wealth, an investor has to convert their currency into assets. And, currency, CNY, euros, dollars, ARS, bolivars, real, etc. You have to convert them into assets that are scarce, desirable, portable, durable, and maintainable. Those are the 5 criteria that matter. And you have to evaluate every asset against that. So what is Bitcoin? Bitcoin is the most powerful digital monetary network in the world, but it is simultaneously 4 things. Bitcoin is an asset, it is a network, it is a protocol, and it is a ideology. And many people misunderstand it. They think, oh, it's just a cryptocurrency. But I think when you start thinking about asset, network, protocol, and ideology, your eyes open. Many people say, well, Bitcoin's not backed by anything. What's it backed for? It has no intrinsic value. And this, they grossly misunderstand the network. Bitcoin is secured by 4 types of power: computing power, electrical power, economic power, and political power. And if you don't understand these 4 types of power, then you're going to someone's going to trick you out of your Bitcoin, or you're going to make mistakes. So, for example, the computing power is 460 exahash. That's all of these millions of Bitcoin miners, custom silicon, and they are channeling 16.5 gigawatts of electrical power into 460 exahash. Now, 16.5 gigawatts is 20 basis points of the power in the world, so it's a small fraction. But 460 exahash is what makes Bitcoin truly secure, because that's all the computer power in the world. If you wanted to redirect all the computers at Google and Amazon and Microsoft and all of the iPhones to do hashing of Bitcoin, they're probably not going to generate 460 exahash. So it's the custom silicon which converts electrical power into computer power, and they're both important. Arguably, it's a lot easier to come up with 16 gigawatts than 460 exahash, because all the hash power is owned by the Bitcoin companies that are securing the network. Now, to put this in perspective, 16.5 gigawatts is more power than the energy used to propel the entire United States Navy. All of the aircraft carriers, all the destroyers, all the ballistic subs, the entire Navy runs on a bit less than 16.5 gigawatts. So that's a lot of power. 460 exahash is all the computer power anybody else can muster. But that's not the only thing. Bitcoin's secured by economic power. And if you look at the 4-year simple moving average of Bitcoin, and then you look at the supply, you conclude about $560 billion have been invested in, the M is wrong, it's $560 billion have been invested in this network. And so that money secures the network. And you got to expect that the people that invested the 560 billion are going to protect it using all of their resources and influence. And then finally, you've got about 220 million holders. 220 million people have some ownership of Bitcoin. And those 220 million people, they're also going to use their political influence to protect the network.
Bitcoin easily checks all of Saylor's boxes. It is scarce, with a lifetime supply of only 21 million coins, of which 93.14% is already in circulation. The other 6.86% will be mined over the next 117 years until mining stops completely in the year 2140. It is also very desirable, durable, and portable, a quality you really appreciate when you compare the leading digital asset to assets like gold or real estate. What are your thoughts on Michael Saylor's presentation and strong conviction in Bitcoin, as well as his firm's latest $593 million Bitcoin purchase? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.